Okay, people, you're all welcome to this session. It's end of the week, and we are going to look at our watch list for next week. All right. First of all, we're going to start with step index, and this is the 24-hour time frame. So, because it's a directional bias analysis, we're going to start from the 24-hour. So, without wasting much of our time, let's get started. So, when you hop on the chart, like I always tell you guys, whenever you hop on the chart, your focal point should be the current price actions, right? The current price action, which entails the current price pattern and the current price swings, because it is the swing points that create or originate the price patterns. All right, trend line to markout pattern is connected from swing points to swing points. Right. So for our important level number one, I'm going to mark out this guy. I'm marking out this significant low because the market is too current on this end right now. So if I put my low or my significant low at that level, it's going to play out pretty soon. And since this is directional bias, we don't know when all of us or those people that are not active right now will be able to see this before the week or before the market plays out. So let's extend our hands a little bit backwards to cater for others who will come late. So we're going to have this as our lowest low, and then since it's a directional bias, we're going to have the originating high. So this is our highest high, right? So now this is the lowest low and highest high. So the market has left that place, and we are anticipating the market to interact with this previous significant low. But we can't wait for the market to get there before we make moves or before we make decisions, because we are price action traders. So whether the market is going up, coming down, we're supposed to be milking it. We're supposed to be, liquidating whatever is going on in the market. So because of that, I want us to focus on the current ends of the market for a little bit. So focusing on the current end of the market, those of you that have been active and have been going through the courses and all of that, you should always remember I said the last two swing points is your focal points. Right? So we have this, and then we have currently we are having this. This is supposed to be the last one and two, but this is not, because this swing point didn't, do what it's supposed to do to be a relevant swing point. Those of you that know, big ups to you. And for those of you that don't know, please go back to the course and get to understand them. Or remember to ask me during your one-on-one sessions. Those of you who are here to enroll for our mentorship, look in the link in the description and come for proper mentorship. Right? So this is the swing point here, and then this is another swing point right there. Okay, so this is another significant swing point. Let's put that this. This is another significant swing point. So we are having two significant swing points like this. I told you guys already. What this guy is doing is not surprising. It's not something that is surprising. He's supposed to do what he's doing. So let's take our our connected arrow and do something for us to see. So we have this low, right? Then we have this high, right? We have this high, and then we have this low right now. So what are we supposed to have? We're supposed to have a lower high, right? Then we can continue having lower lows and lower highs, just like the market has said it is in a downtrend, because we're having this low, lower low, right? We're having another low, lower low. We have this high, lower high. So step index is actually in a downtrend. Okay, so what we will be anticipating for the week ahead is that step index to help to push, give us a push towards this direction like this, to come and create a lower high. Determining where the lower high should be possible, those of you that have access to the course, you know exactly what you're supposed to do. Okay, so from here, let's say let's just put our arrow here. So we are wanting step index to push up, create and confirm a lower high, lower than the previous high here, and then keep giving us the lower lows and lower highs kind of vibe. So at that time now, when we connect this 1 and 2, all right, and then we connect, then you can give us that lower high for us to be able to connect 1 and 2 as well. All right, so this is the directional bias for the 24-hour time frame. So if I'm to dive into the lower time frames, like let's say the 1 hour or the 4 hour, let's quickly go to the 4 hour for us to see um, deep into price. Okay, let's go to the 4 hour for now. I think that is also going to be the time frame we're going to stop, because it's a directional bias and we're not looking for entries. I'm only here to show you guys what direction is possible for these guys to focus, for these indexes that we have picked to ride in. Okay, so excuse me before we go to the 4 hour. So if you look at this particular low and this other one, like I said, this swing point isn't significant. Why? Because it didn't do what it's supposed to do to be a significant swing point. All right. But if you look at it, it's actually a low. Okay. So for it to be a previous low, it's a minor low. All right. And then if you align it with this current low right now, you can see that we are having the market giving us candle rejection. That is actually telling us that yeah, price have to push up. All right, price have to push up. So we are having the sweep scenario here. So meaning price have to push up. So we anticipating price to give us a lower high. It's not crazy. So this is another confluence for that. So aside the fact that we are having, we already see that we are in a downtrend. This particular price section now, or the current price section here, is also telling us that price have to push up because we are having a sweep of a previous uh, swing low. All right. So let's go to the 4 hour, and you can see maybe you can get more confluences and more reasons. But we are going to stop on the 4 hour and go to other indexes because we are dealing with just directional biases. So guys, this is the 4 hour time frame. All right. So this is the 4 hour, and like I said, whenever you switch on any time frame, whenever you switch to any time frame, make sure you adjust your setups because definitely I didn't save them, so they're actually going to shake. Unless you save them, then you can be cool. So whenever you switch to any time frame, why your focal point becomes what? The current ends, the current swing points, the current price patterns. So the last two swing points on the 4 hour time frame is these two guys, right? So this guy was a sweep of a 24-hour swing low, and you can see here price gave us a confirmation for this buy, this current buy. I didn't trade this guy this today, or I didn't trade this guy throughout this week. I've not traded this guy for a long time now. Step index. So let's take out this. Just use it to mass swing point. So we take out that, right? So if you look at this again, it also gave us a sweep, right? It gave us a sweep. Price came through but didn't close below, it closed above. So this is a sweep. So this is another reason for us to significantly beat our chest that step index have to give us that push to the upside. So for this time frame, if you are to look at the buys or look for the buys, because I know there are more opportunities that will happen. Those of you that understand the entries, you know what I'm talking about. More opportunities you can scale in here and all of that. So your final target should be here for this time frame, and then your first target should be here. All right, this is the midpoint, and those of you that understand or trade the M's and W's, this is significantly a W formation, right? So this push like so, and whenever you have the W formation, that's why I said that the final take profit should be here. Whenever you have the W formation, you have to write back to the uh, originating swing point of the W first leg. All right, so that's it for stepping this. We are anticipating a push up. I'm sure like from now to the next few days, stepping there should give us that push to the upside, and then we will confirm if it is going to keep giving us a downtrend or it's actually going to break above this swing point and this swing high, and then we can start creating higher highs and higher lows to change the trend. But for those of you who understand what I'm saying, big ups to you. Let's look at volatility 75 index. Okay, people, this is 75 index, volatility 75 index. So it's just the same rules. Make sure you don't forget the rules. If you forget the rules, you become a sinner. So don't forget the rules, don't become a sinner. Stay righteous in the market. Remember the market rules, okay? Remember the system rule. That is the thing. Remember the highest money concept rule of approaching the market. So let's for me, I'm going to have my lowest low there because yeah, what price is doing is actually looking like it's going to come down there because I'm going to explain in Jiffy. So the highest high is going to be right there because that is the originating uh, swing point of this impulse we are having. So for those of us that do impulse correction and impulse, we see already we are having this guy as an impulse like so, then we're having this correction and it's looking like what continuation like that. All right. But for we are going to focus on current side of the market after getting the highest and lowest point. Our focal point becomes the current side of the market. So when we talk about important levels are turning points. All right. So there are a lot of important levels here because this was a ranging market. this kind of ranging vibe. It is not actually trending up or trending down on this time frame. So it has been a range market for the past few weeks now. So because of that, I'm going to have this as an important level, because when price gets here, it can get funny, all right, or something can happen, because price is price. You can't just say what you want it to do or see exactly how your paper trading tell you. You have to look at price based on what price action is saying, all right. So we have that at an important level, and also looking at the current ends, I have this low as an important level as well. For this, I'm not going to have the anticipation line because price is so close already, so I'm going to have the dotted lines to mark out horizontally that level. If price gets there and give us a sweep, we're actually going to look at more buys. If price gets to this level and give us a push down, then the sell is going to be okay till we get to this level, and if it gives us a breakthrough, we can also fetch it to that level. This is based on price swings, like price important levels that price have created on like the 75 index. All right, so let's look at it in the pattern wise. All right, so we have this swing point, right? This is a significant swing point. I know most of us are waiting for me to connect this guy like so and connect this guy like so, but now I am a wise pattern trader and I am an experienced rebel. All right, so because I understand what I'm talking about, and I know what I'm supposed to know, I'm not going to look at this as the impulse. Nah, this is not the impulse. This is the this was the originating impulse, but this is the impulse I'll focus on, because this is the impulsive correction. All right, like I said, a lot of us will be waiting for me to connect this guy now, but if I connect this guy, let me explain something for you guys. If I connect this guy 1 2, right, I am definitely supposed to connect this guy 1 2 like this. It's actually making sense when you look at it. There's nothing in the market that doesn't make sense. When you are losing money, the trade you entered to lose that money was making sense. The decision you made is making sense. So there's nothing that is not making sense. There's nothing that will not make sense. Everything will make sense. But if I'm to connect this resistive trend line here, it means that this level is just one swing point. Why? Because when the market left this guy, it only came back here. It didn't go to touch the resistive ends. I think I'm talking too much now. So let's continue. If you want to know better, look in the link in the description and join African Rebel. So this is it, all right. So we have this 1 2. So it is still preaching the same message to us. We're having impulse correction and we're anticipating about a continuation. When the price pattern has two touches, it becomes relevant. So it might not give you the third touch. It might give you the third touch. So like I said, now our price pattern is now giving us that confidence that yes, we need price to come and actually interact with these based on what the swing points have said to us. So we're looking for price to interact with this guy. When you interact with that, then we'll know what is going to happen next. And if I'm to extend this guy and price to keep closing and closing, you know that the third touch of this trend line, this supportive trend line, will also interact with this low. For those of you that understand what I'm saying, big ups. So let's go to the 4 hour time frame, and I don't think there's a lot on the 4 hour because this was ginormous bearish candle and it's so very very close to the swing point already. So for those of you that can fish out entries, those of you that can scale in, those of you that understand our trading system, you can scale in. Make sure your first target is this guy, and then after that the next target will be at this level. Let's look at 75 1s index. Okay people, so this is like the 75 1s index. This is the spot of the original 75 index. This is more volatile and have more lower lot sizes. This is more volatile than 75 index itself, but it has more lower lot size. So this is more ideal for any type of account size, big or small. 75 1s is a boy for it. So let's look at our last two swing points for this, just as we always look at this. 1 2, these are the last two descending swing points or resistive swing points we have, and then the last one here is here, and then we also have something here, but I'm not going to be concerned with that because of the way price is looking like. So the way price is looking like now, it's looking like an M kind of move, this push there and like so. So overall we should be anticipating that drop if we're looking at M's and W's. All right, so my first level will be here. This is my lowest low, This is supposed to be my highest high, but you see price only swept. Sweeping means when price was above but came back significantly to close below. So we swept. So my highest level will now shift to this guy. Okay. So this becomes my highest level here. So because of that, because of this sweep, we know that anytime we have a sweep, price is supposed to go back to the originating swing point of the swing point price swept. Most of you don't understand my language. Big ups to you. So for that, after that, we're going to now focus on the last two swing points, which is going to be we are going to start looking at price patterns. Okay. So for that, I'm looking at this. So we have this impulse, we have this correction here, we have this impulse right now. So we're having this drop, and then we have this guy, right? This is what we are seeing on the current market. And where you can put your trend line is for two or more uh, swing point. So our trend line can go like so, mapping out the price structure. We can go like so, and then we can also connect these two guys, 1 and 2. So we are having this expanding structure on roughly 75 1s, right? So we're having this expanding structure, and then this is going to be our first target of the sell, because from what we read from beginning, we said that we swept this guy, which is one confluence that we should sell. Number two, you can see we also sweeping this guy as well. Price swept this guy, another confluence to sell. And then another confluence for the short is what we're having this expanding structure. This is the second rejection of the expanding wave, meaning we should be looking for price to come down, either to give us a low to sweep or to give us a dead touch on our expanding structure. All right. So if I'm to go to the 4 hour, I think it's just going to be deep into what price is doing currently, but we are looking at directional bias. So our directional bias for 75 is short to this level, and after that level, we can be looking at it to be to a third touch of this trend line, or to be like this level. So if it sweeps here, we're going to take the buy back up. If it doesn't sweep and come to theta, then we can look for the buys, and so on and so on. So for those of you that understand graphs to you, let's look at volatility 25 index. Alright people, this is volatility 25 index, and this is the 24-hour time frame. Alright, so we can see clearly from here price swept this swing point. So the final target is here, so this is going to be our lowest low. So we're looking for price to find its way down to this level, and then price swept this low. So this is going, so sorry, price swept this high, so this is going to be our highest high. All right, and from literally, if you look at this now, we have seen that price has gotten or made this impulse to the downside, and we are currently in a slightly corrective phase here. All right, we're in the corrective phase here. This is the 24-hour time frame, like I said earlier. Now, when I look at this, like I said, after we have looked at the highest and lowest point, your next focal point should be what? Price swings. All right. Now, for those of you that understand or that knows from the Falcon FS trading styles, those of you that understand what is called the Falcon flag, this is literally the Falcon flag. When you have an impulse to the downside, and then you have a correct story, not to the downside. When you have an impulse at all, it can be to the upside, to the downside. But when you have an impulse, then you have a little, flag, and then you have a correction, a continuation of that impulse of that structure. Then you have a deep reversal into or taking the whole of the continuation, the whole of the third phase, which is the final impulse of the part of the structure, taking all of it and then coming back into that direction. Then you are having a Falcon flag. I hope I explained it well, but that is not my problem. So from there we have this swing point to be relevant, we have this to be relevant. Now this swing point isn't relevant because it is what we count as liquidity. I'm going to explain in the Jiffy. So because of the liquidity that is there, this swing point is relevant still. Alright. So we have this 1 and 2 to be connected like so. And then we have this 1 and 2 to be connected. Alright. So literally you see already that we are in a descending structure. Now let me explain a little about the liquidity that is seated there. In the market we buy and sell, and whenever the market is in equilibrium, we say the market is buying at equal low and or selling at equal buying at equal low or selling at equal highs. Okay. Now if you look at this, this slightly the same scenario. This is an equal low, right? The low is equal, which means it's not supposed to be. Whenever you have equilibrium, price bought at the same level twice, you have to be careful with that place. It's not ideal. So this was just a liquidity and also an illusion for those people who sell equal lows. Sorry, who buy equal lows, who deal with the double top and double bottom kind of thing. So the bot here, you can see price was bullish for the previous day, but you can see today is bearish and it's definitely going to continue riding downward, because if you look at the overall trend, just like we read from past, you see that we're looking for the market to come down here. So this was just an elusive move, and from here we have the second rejection. So we are anticipating the third touch of our trend line here. So for volatility 25 index, we're looking for the market to give us the drop down. The first target will be here on the third touch of the trend line, and then subsequently we can look to go down. But after third touch, we should look for a push to create another lower high before we keep going down. And if you want to look at this in a lower time frame, a less lower time frame, you can, if you go down, you can see that this is an impulse, right? And this is a corrective phase currently. So I don't want to shift the time frame because my network is a little bit crazy, but look at this is going to be like so on the time frame. This is going to be a price pattern there, right? 1 2, and then something from there like so, 1 2. So this impulse correction, we have to pull down. So this double bottom here was just an illusion for those people who trade equal lows and equal highs. That is what in my community we call it uh, liquidity at equals. All right, and what is going to happen to them is they're going to receive they are going to fall into what we call a bear grab. That's what we call it in my community. So last but not least on our watch list, let's look at volatility 100 1s index. Alright people, this is volatility 100 1s index, and looking at current price action, we are having a good downtrend already. Price is cooking in the downtrend and it is currently about to confirm the lower high, meaning this guy. You can see the day is about closing and it is looking so bearish. So if it closed bearish, it's going to confirm the lower high. Those of you that are in the community, uh make sure you go to a lower time frame to get the appropriate confirmation for the swing confirmation before you deal with it. But for what price is saying here, you can see we have this impulse to downside, we have this swing point, we have that swing point, and then we have a lower low. So clearly the price structure is telling us that we are in a downtrend. Okay, so we are looking to create a lower high here, and then we can keep dropping to keep creating what, lower lows, lower highs, lower lows and lower highs, and like so till whenever the price uh, breaks the rule, and then we can get to change the trend. So our lowest point is going to be here, right, and our highest point is going to be here, because this is the lowest point, the highest point of the coin price pattern. So if price breaks any of these, then we can know if price is going to change trend or not. If price break through this guy, we're going to start looking for buys. If price keep going low, we're going to keep looking for sells. So we have this 1 2 as my pattern, and when price confirms, we're going to have like so. But if you go on the lower time frame, it's already confirmed for some. So we're going to have like so, and going to keep looking for what, shorts on volatility 100 1s index. So guys, those are the pairs we are looking at for next week, or we're going to be trading subsequently till we have another breakdown session. Please always remember to do your own analysis. Read the market for yourself and get to compare them before making decisions. For proper mentorship, please look in the link in the description. And to join my daily trading signal group, please look in the link in the description as well. Contact me for any of those. Without wasting much of our time, stay highest, and thanks for watching.